Hello, everyone. Welcome to this panel. So this panel, we're going to talk about RWA. RWA seems to be a very popular topic today. We have some really phenomenal guests today. I'm Coco from The Block. I'm the APAC director from this American media company. And so
Hello.
please, our guests, can you do a self-introduction about who you are and what you do?
Hi, my name is Justin Kim. I'm head of Asia for Avalabs, and Avalabs is a team behind Avalanche Blockchain Network. So I oversee business development, ecosystem growth, committed to Asian region. So we've done a lot of work in RWA space, JP Morgan, Citi in Singapore, SMBC, second largest bank in Japan, and Bank of Japan as well. So we'd like to dive into more details and talk about what were the true rationales or motivations for these RWA initiatives. Thank you.
Great.
Hello, my name is Jacob, and I'm the co-founder and CEO of Clearpool. We are a private credit marketplace. We're around since 2022, and we've done roughly $800 million worth of loans. We also worked with Avalabs on a few of those loans, and recently we have announced the launch of a new blockchain called Ocean, which is a blockchain fully dedicated to the needs of RWAs, with the idea of making RWAs more accessible for everyone.
Great. Thank you. Please welcome Harry Zhang.
Hi, good afternoon. I'm Henry. I'm the founder and the CEO of DGFT. DGFT is a marketplace. You can also call the exchange. DGFT is an exchange dedicated for RWA, now called the real-world assets. We are licensed in Singapore and just get a license in Hong Kong. The uniqueness of this marketplace is we are a DeFi on-chain marketplace, which means we do not own client asset. You can hold the assets in your own wallet, and we can settle in both fiat currency and stables. And in the last 6 months, DGFT is the chosen partner for RWA tokenization and distribution for some tier 1 asset providers, including UBS, distribute the money market funds through DGFT. And 2 months ago, actually last month, we are the only tokenization and the distribution partner of Invesco for the first time, the private credit fund in the market.
Yes, please. Next, Guyen.
Hi, my name is Guyan Liu. I am the co-founder and the CEO of Paiman Finance. Paiman Finance is an RWA project based in New York. So we tokenize the top-tier alternative assets for users on the chain. So by alternative assets, we mean those assets have a reasonable return, but a very limited risk. So we have 3 product categories. The first product category are funds. So we tokenize top-tier private credit fund, private equity fund. Our first product is going to be a large brand private credit fund, which will launch in 2 weeks. And our second product category is real assets. We are working with an asset owner who own Airbus A320 aircraft. We are going to tokenize that aircraft. And our third product category is unlisted shares. We work with venture capitals, private equities, and the family office to tokenize their unlisted shares.
Thank you so much. So we'll get into the questions. So my first 2 questions is quite technical. It's about the chains and infrastructures. So I would like to direct those 2 questions to Jacob and Justin. So in terms of infrastructure of RWA, what do you think we should prioritize in terms of low latencies and all sort of things? Do we need a specific chain using for RWA? And is there anything that you're doing particularly for RWA in terms of infrastructure? Please.
Yeah, so I think that's a really great question. Latency, compliance, these are all really important topics. You can't really compromise any of this, really. You need all of this.
Exactly, I agree.
Yeah, so I think that's actually the vision of Avalanche that we have. So, we need to reverse engineer the real problems and real questions that we face. So we worked with JP Morgan. That was Project Guardian in Singapore with MAS, Monetary Authority of Singapore, right? We also work with Alipay, Grab for their cross-border payment settle chain on Avalanche. So when we work with this government financial regulators, we get these questions like, okay, so you're putting this traditional financial products on chain. It sounds very innovative, efficient. We like all that, but we really don't want random people to validate our people's financial transactions. It's private data, and we don't want random people to make financial transactions on the chain. And we don't want random people to deploy smart contracts, which could harm just normies, right? Yeah. So when you actually have to solve these issues and problems, you probably need your execution environment, because if you want to stay compliant, answer all these 3 questions, you really can't do anything on a general purpose blockchain like Ethereum, Solana. There is no way you can tackle these particular questions. So on Avalanche, you can actually launch your public EVM blockchain within about 10-15 minutes, fully a custom EVM chain, so you can actually whitelist who can come in as validator. You can actually whitelist who can come in and make transactions, and also deploy contracts. So definitely we see a future as many chains talking to each other, but with certain conditions to stay compliant.
Very good. Well, that's very insightful. Thank you. Jeff, you got anything to add up?
I think I agree. I think from a technical and speed and cost perspective, I think an RWA chain the needs wouldn't really differ from any other chain, right? So like in general, I think we came a far way where we have cheap and fast transactions on a lot of different chains. One thing that's obviously important, he highlighted, is compliance. So one of the reasons we think that currently RWAs are still not really widely adopted, or not as widely adopted, is that sometimes you have, or very often you have all the different compliance standards. So a lot of these RWA tokens are permissioned, meaning you can't really transfer them, you can't really use them in DeFi protocols. So what we're building is a chain with compliance in mind at the center, where these different permissioned assets can then actually talk to each other, and you can use DeFi protocols just like with permissionless assets, but with permissioned assets. So I think compliance is probably the most important factor that differentiates RWA chains from other chains.
So we do need a very specific changes for RWA, at least for the environment setting.
Yeah,
compliance.
I think RWAs can work on any chain, right? And but obviously, if you do have a chain that has sort of like compliance layer built into it, that can facilitate different things. Yeah.
I have a very good question. I think in terms of compliance, we already understand it is very important, it's a key issue. But also at the same time, what about liquidity? Because I think I heard the keyword of multi-chain. So in terms of liquidity, we want to have liquidity across different chains, right? And we don't want what we call the liquidity silo. And we want have different standards, so DeFi, so it can get really complicated, right? So how do you guys see those issues? How do you bring liquidity across those different chains? Anyone?
Yeah, I think just very quickly, I think that's definitely a problem, right? So having all different chains with liquidity, and this liquidity it's not interoperable, it's not ideal, right? And this is why I think having a multi-chain framework and in mind when building those different chains and working towards that is very much key, right? I think Layer 0 is doing an excellent job, right, with for example, their OFT standard. It stands for Omni-Chain Fungible Token, I believe, right, where you can basically natively sort of like bridge different tokens across different chains. And I think there's also a lot of applications like lending protocols that are coming out that are working with different chains. So you can actually interact with assets on different chains.
I'll probably just go over with the actual use case to make everyone understand this easy. So in Singapore, there was this one recent project since November. So I'm Korean, so whenever I actually travel to Singapore, I'll use my Kakao, which is basically an Alipay in Korea. I can I can scan the QR code, make the payment in Korean won. So Alipay will send this particular payment to GrabPay in Singapore, but they're actually not dealing with banks anymore. They used to make international wire transfers, but they actually replaced it with stablecoins. The point that I'm getting at is they're using Singaporean dollar stablecoins for this payment chain on Avalanche. So yeah, so when you think of stablecoins, it's on a decentralized network, right? But within Avalanche, you can use few lines of codes just to move all the assets across this JP Morgan chain, Citi chain, and Alipay and Grab payment chain. So it's just 2 lines of codes to move all the stable coins and any asset you want. So definitely when we actually vision the future of many chains talking to each other, moving assets freely, the interoperability is the key, and it's natively built in within Avalanche. So that's why we're seeing ecosystem of these financial products coming in to Avalanche in Singapore, Japan, Korea, hopefully in Hong Kong as well.
Nice, very good. I remember Avalanche since the very early days. I was in crypto and we were building this database integrating Avalanche, and Avalanche never replied to our emails because we're too small. No, I was kidding.
We'll talk about this later.
It was like ages ago, back in days. Okay, so my next question is actually about jurisdictions. So I know Guyen is from TradFi background. So I'm gonna ask you about how can RWA project navigate those kind of fragmented jurisdictions across different countries? You know, how do you guys deal with those things?
Yeah, so when we have to make a decision in terms of regulation, there's always an option which is more like compliant. The other option is you can move faster, but you might cut the corner. We'll always choose to be on the side of over-compliance. So, for example, we do not sell to US investors, which means you might not need a broker-dealer license. But we still partner with a partner who have broker-dealer license. Just want to make sure we are compliant. And yeah, and then the other thing is KYC. You need to do KYC to other investors. So it might be a lot of burden, a lot of work, but we want to make sure we are compliant. And in Singapore, we work with a family office who have a CMS license.
Yeah. Henry, do you got anything to add up on from your perspective?
I would say this is, we talk about RWA, which is a core topic for this panel and actually across this event. People will easily agree there's a great outlook about RWA on chain. Talk about trillions, right? Even don't use billions. From current single-digit billion to trillion, it is 1,000 times. So 1,000 times kind of a growth potential is great. Everybody like it. In the next maybe 5, even 10 years, grow by 1,000 is remarkable. But this is just an assumption. How to move from the current billions to the trillions in the next even 5 years? What's the roadmap? That's the key thing I think we should discuss. From my perspective and DGFT perspective is I would call what are the enablers? What are the key enablers, or you can call the catalysts to make it from the current billions to the future trillions? There are a couple of things. I mean, first 2 questions talk about the chains, interoperability. I think this one, if I may say, this is a technology related. Interoperability or the performance of each chain is very important. Just like internet, I mean, back to 1995 or even to 2000, you cannot imagine they can support the application like Netflix. You can support the application like Yahoo and maybe early stage of e-commerce. So technology is very important, but personally, I'm very positive. Given smart guys like Avalanche and etc., sometimes you're just getting better and better. Number 2, we're back to the question Coco you just asked, is regulation. Because even moving to RWA itself is a regulated asset. It's a financial market. You need certain regulations. So these regulations is, but you don't expect that the so-called the regulation is ready, then innovation follow. No, it's different. The sequential is innovation first, then regulation follows. That's the normal pattern. But that said, the regulation should be embracing and welcoming the new innovations. That's current situation is, and the regulators are willing to support, but in terms of specific actions, not yet. I'm generally positive, but I think the regulation side can be more forward-looking to support the things. So especially RWA, we cannot avoid the topics is how do you handle the smartly, efficiently about the KYC thing, how about the cross-jurisdiction. Technology is very no jurisdiction specific, but regulation is very jurisdiction specific. That's why the people need to have a license here, license there. So you can see this as an obstacle. You can also see this as one thing need to be addressed. If I may say number 3 is I would say the money, the stable coin, which is maybe most promising so far. You can call the stable coin is the first successful use case of RWA. It's a mirror, it's a certificate of a dollar on chain, which has been widely accepted, which is great. So you have a money on chain, then you naturally look at where's the asset. I want the asset on chain, otherwise where do I use the money? I cannot invest my money. I need to invest, I can earn something, otherwise I earn nothing. So these will be the 3 things, maybe a little bit more than you ask. I would say technology, regulation, I also put the money. There will be the 3 key things for the RWA adoptions.
Very good. I really like your answer. Thank you, Henry, for sharing that insight. But then I want to ask the follow-up questions. So you mentioned that we want to go from right now, the current stage, to a trillion markets. And I'm seeing a lot of institutional users or institutional participants, they are already in the RW markets. But I think it's also, are we also embracing, mass adopters from the general public, and how we're going to come over that challenge that we might be facing? Any suggestions from you guys' insights?
Yeah, if I may continue a little bit, I would say yes, it's not now, but definitely coming. RWA tokenization, when we talk about RWA tokenization, basically you can see 3 stages: tokenization, distribution, and application. The assets on chain is tokenization, which is more and more accepted. It's mostly evidenced by the major asset providers. They are bringing their assets on chain. We have a BlackRock, just about 12 months ago, they start to bring the first money market fund on chain. And now we worked with UBS, which was 5 months ago, and Invesco was merely last month. But you have this more and more people as providers on chain. That's tokenization, but not that difficult. And you don't need a license. It's a technical job. Then moving to the distribution, which is the main topic now, are selling the RWA tokens to you, T-bills, or aircraft maybe. Later on, I'm just a distribution. Yes, some people start to use it. It's not a phenomenon yet. More important is, why do I buy T-bills in tokens? That's the application. Probably the answer is because I can buy on this chain, I'm moving to another chain, interoperability. Then could be something else. Like Jacob, they are doing is maybe you backed by a pool of RWAs, then you can have a token ownership of the pool of assets, which give you sustainable yield, which are really lacking in the DeFi products. They don't provide a sustainable yield. Yes. Then this kind of things will moving to the application. Then tokenization, distribution now, then moving to the application. Then the use case will evolve itself.
Yeah, maybe for me to add, I do think that, right now we're at the very early stage, right? I think a lot of RWAs are still a little bit like clunky in a way, right? A lot of like retail users are like, why would I buy this asset if I can just buy it on interactive brokers, right? And that's a fair point, right? So I think the main thing, or at least our vision, is we want to make RWAs feel a little bit more like DeFi, right? The moment where you can actually use, RWAs, and you can use them on DeFi protocols. You can basically hold crypto native assets, and then you hold RWAs. A crypto native yield is great if the market is booming, usually, right? The moment the market comes down, all of the crypto native yield comes down, and then it is very nice if you can automatically switch to a more sustainable, private credit or T-bill yield, right? So I also think that, if I could buy equities just like I buy tokens on Binance, right? If I have one space, that would be great, right? Because I don't need to off-ramp and on-ramp, et cetera, et cetera. I think we're going that direction. And then last but not least, I also do think that there's a huge opportunity with private assets, right? So I think, a lot of people maybe already have access to sort of like, publicly traded assets. But when it comes to private assets, private equity, private debt, I think, tokenization can really, significantly improve liquidity, can give access to, different users. And, once you can actually basically, again, use one of those exchanges to access those type of instruments and interact with DeFi, then I think RWAs are going to be exciting. And I don't think it's either or, but I think ideally we have a world where we basically, commingle those assets. And that's what's exciting about it.
Yeah, maybe I can add to that. So that we're always thinking about what's our value proposition to investor on the chain, retail and institutional. I think the first value proposition, as just Jacob just mentioned, is accessibility. Because retail investors, they use those like great assets, they're only accessible to institutional investors because because of the minimum investment barrier, some of them, they are not widely accessible. So our team with a traditional finance background, we're trying to locate those assets and make them accessible to the retail investor on the chain. And the second value proposition we see is the risk reward, or say risk-adjusted return. So if you think about a chart, on the x-axis is the risk, on the y-axis is the return. So the Treasury, it's here, like 3-4%, no risk, but a little bit reward. And then if you think about stocks, real estate, they are highly volatile, but the return is higher. So we try, those assets we go after as those with like very reasonable risk, but can yield anywhere from 8% to 20%. So I believe we see the mentality on the chain has changed. People, investors become more mature. They really care about risk-adjusted return rather than just a pure yield. So we believe that's the trend. And also the third thing is like correlation. We believe we are uncorrelated with any yield you can get on the chain. So if you think about the portfolio theory, you are moving up your efficient frontier for the investor on the chain.
Maybe I can add, I really like the word accessibility here, and I think we have a really diverse group of audience here. So maybe I'll just add to the accessibility and the benefits of tokenization. So I think just to define tokenization, it's really to change the format of a financial product to a digital copy on blockchain. Simply, you're just replacing paper with agreements and set of legal rights to a blockchain copy. Like it's a file that's immutable, unhackable forever, right? So when we actually remove this pieces of paper from financial products, they do a lot of things. So going back to our work with JP Morgan in Singapore, so what we did was traditionally all these asset managers, they have a strategy, right? We'll invest in the fintech companies in Hong Kong, we'll invest in automobile companies in the US. But if you take a closer look, it's actually just stocks. Because stocks are the only digitized and accessible financial instruments. These asset managers, they love to invest into these VC funds, private equity funds. They love to invest in real estate, but they're all on pieces of paper. That's why they can't process this, because they have higher yields, higher return. They'll love to do this. But when we actually bring tokenization and increase accessibility, that's what tokenization really benefits TradFi, right? So yeah, so that's the accessibility I just wanted to highlight, adding to his point. Yeah.
That's very good. And it's very interesting how you mentioned those big names, the TradFi companies. I'm sure you guys come across a lot of clients, people you talk to, people in the industry. Is there any other things other than maybe, real estate or bonds, anything else that you see has a long tail potential in having that in RWA? Is there anything in terms of like? industry-wise?
I may have a little bit of controversial view on that one. I don't think all the real world assets are suitable for tokenization. I'm making this comment from the perspective of product market fit or go-to-market strategy. Real estate is definitely a big asset class, right? Hundreds, trillions of money has been in the real estate. But is real estate, for example, is the, for now, the right, what's the go-to-market strategy for real estate tokens? I'm not saying nobody should do it. I'm just using that for example. Because we talk about tokenization, distribution, and application. Of course, we can tokenize real estate assets, a piece of building or REITs type of thing. Then distribution, yeah, somebody want to buy, you can just buy it. But then coming to I'm a little bit struggle in terms of the asset like real estate, go to the application. Who are the investors of real estate in the current world? Who are investing into this more than $200 trillion into real estate? They are very traditional investors. Traditional doesn't mean negative to me at all. Traditional means they be this one as an asset allocation for the kind of stable income returns, right? So the tradability is less. Is less. They don't trade. Do you trade your house every day? No. Does the price change for this building today and tomorrow? No. Then number two, are these buyers familiar with tokens, wallet, Web3? They probably not the early movers in this regard. Nothing wrong. Again, nothing wrong. But now if we're selling to the current buyers of a real estate, say, hey, you should buy in this real estate in token way, then the education time will be much longer. On the other side, who are the people very familiar with tokens, chain, blah, blah, are those you can call the crypto investors or Web3 investors. But what's their risk return profile? They probably put the real estate at the lower priority for the moment. They have a more risk tolerance. They like volatility, this type of profile. So these people familiar with the technology, but they're not the big fan of the asset. The big fan of an asset not familiar with the technology. Then we try to combine these two together. Actually, you're picking a very tough battle to fight. That's just give an example. Probably not everybody agree with me. I'm also a lover of real estate, but I probably don't buy real estate in tokens.
I love Henry's points because I definitely agree. Because tokenization, I think there are misconceptions. Tokenization doesn't bring or increase liquidity. Tokenization doesn't make unattractive assets attractive. So that's why we saw failures in STO phase. So we changed the term, right, to RWA, because we were tokenizing dorm rooms, shoes that don't really need to be tokenized. But going back to some assets that can really use tokenization will be like loyalty points. Loyalty points have been moving from pieces of coupons to mobile formation, but then because they have to deal with like thousands of different franchises, their data are siloed, right? So they can move on to tokenization. That can benefit. That's long, really long tail. Or some areas like that I'm working on are like K-pop, animation. Those are really good assets because they are proof of contribution to your artist, to your animation series or games, NFT items. Those are really long tail assets that make sense with tokenization.
Any other examples that we have seen that has the potential in RWA?
Yeah, so I'm thinking, we're thinking about like we want to make create value for the DeFi world. At the same time, tokenization also want to create value for the traditional finance, because we do not want the fund flow of value creation to be a single way, like money from DeFi world invest in traditional finance. We also want to create value for traditional finance for doing that, right? If you think about like Securitize, they have put a lot of fund available on the chain. We really respect the work they've done. So, but like one purpose of tokenization is to expand the investor base. And like Henry said, if you you own real estate, but there's not much real estate investor available on the in the DeFi world. So what we are thinking about, the really value of the DeFi or say Web3 can create for the traditional finance is those like instantaneously providing liquidity, use their token as collateral to get liquidity. Handle like PT, YT derivatives. All of those is what we are really good at in the Web3 world, and can create lots of value for the traditional finance.
Yeah, that's a very good answer. Well, because we have mentioned TradFi so often in our conversations, now I'm actually want to ask those really challenging questions. I'm gonna say names. I'm gonna ask them really hard questions, guys. So those institutions, for example, like BlackRock, they are dominant in the traditional finance world. If they come into RWA, will they dominate RWA just like how they slayed the market before, or you think there's gonna be newcomers in this RWA world? How the new RWA scenario is going to be intertwined with the traditional finance situation? This is a challenging one, guys. Yeah, like how are we going to play the game with them?
Well, I think it should be complementary. It's not a competition. We work with BlackRock. We have Biddle on Avalanche. We have Benji token on Franklin Templeton. It sounds like they're really leading, moving forward the industry, but do you know how many holders they have? Less than 200. It's $1 billion money market fund on Ethereum, Avalanche, and some other chains, but they're less than 200. So it's not really successful, I think, because they have really high investment minimum. I really like DGFT because they have really low investment minimum. Kudos to DGFT, right? And so they haven't really seen the success. So they're not really strong, I think, in a sense. So they have problems with distribution, and they've been targeting traditional investors. But what they failed to see in the first place was we have more than $220 billion of market cap for stablecoins. This year, they're realizing, oh, we were targeting the wrong audience. We actually need to work with this crypto-native investors, crypto-native wealth. So I think that's one change. So I think it should be complementary because they also benefit from lower cost. BlackRock, Franklin Templeton, I think they actually use, so Franklin Templeton use 50 people for transfer agents work, which they need to keep record of like ownership, issuance, all that. But Franklin Templeton, they only have 1 people for Benji token. So that's the benefit. So they should be complementary, not competitors.
I think currently, yeah, I would agree. We are seeing a little bit that those two worlds merge together, and it's not necessary that one side wins in that sense, right? For example, BlackRock obviously made their money market available on chain. It is highly permissioned, very high minimum investment criteria, etc. But what happened is that a lot of more crypto native companies like Ondo and Usual and the likes, they basically started working with BlackRock and those players, and they sort of like added something that is more DeFi native and made those products available within the broader DeFi market, and then they made those products available on more like crypto native applications. Which are still the ones that are dominating, right? The money markets, the lending markets, sorry, and the AMMs, the DEXs, etc. are still the ones that were actually created by crypto natives. So I think we're going to see that those two worlds slowly start working together. And I do think that Franklin Templeton, BlackRock, they have amazing assets, and then maybe they can benefit from the innovation that has happened within DeFi and crypto, and it's not really a competition, but I think they work together very well.
They're learning as well. They're learning and adapting to
and they just basically work together in that sense. Yeah.
Yeah, same view here. I totally agree with what Justin and Jacob said. It is not really the dominant, even not competition. I would say this their promotion. It's promoting. I really applaud for the people like BlackRock, like UBS, Franklin Templeton, and recently Invesco. They coming to explore, pilot this kind of assets on chain because we share the same vision. Because chain, using blockchain and using Web3 as a tool, is in the next generation of infra. And we have this kind of big guys, they quickly learn it and agree with it and using it. So it's remarkable. And it's remarkable. And compared to the current size in the traditional way versus the pilot, the size on chain, there's a lot of room to grow. A lot of room to grow. Let's look at BlackRock. They first on one chain, they're now on multiple chains. And also the use cases like what Jacob mentioned, like Ondo and others. And they use BlackRock Builder and using some other money market fund tokens as a fundamental to build the derivative or build the combination or called the structure. So once you have the very basic things have there, a lot of good things will evolve, will follow and evolve. That has been repeated many, many times in the innovation thing. 20, 25 years ago, 30 years ago, when we think about how the internet can be used, we even using our imagination, we still cannot forecast what is using now. That's the thing. And I highlight one more point. But these big guys coming in, also very, very unique difference is they bring in what really means institutional grade. They really means institutional grade. A lot of meanings behind that. Behind this a simple word. Because we want these things to happen, we want these things to be sustainable. Even very good things, if you do a not well-organized way, so you will see the grow very fast and the drop. Then have to come back again, regain the confidence, and some incidents you drop again. This kind of a pattern happened in many innovation process, including crypto. Including crypto, up and down, too many things, just because some bad actors then drag down the whole industry. Now how to solve it? Many things. One of the key things is you really see the institutional grade. Then the people feel comfortable because it's about the money. It's about the real money relevant to everybody.
Yeah, adding to Henry's point, we believe that the adoption is, we are in a very early inning of the adoptions. If you think about a couple $100 trillion markets, it's always still very small, and there's not much competition. And for the large traditional finance companies, we talk to them all the time, and we feel a couple months ago when we talked to them, we feel, oh, they know so little about crypto, they know so little about AMM or Panda, how it works. And in the last week when I talked to them, I feel, oh, they really beef up their team. So I can see their team in those large traditional finance have been really beefed up in their knowledge, in their team, in their understanding. I think they're learning very fast. And we believe there's a long tail, as you mentioned. There are smaller asset owners. We can DeFi, Web3 can do so much for them. For example, our A320L bus, they're amazed. We can easily do things like a senior tranche, junior tranche. Those structuring efforts used to be like monopolized by investment bank, by a very small team. And if you only have like a couple million or 10, 20 million assets, it's too small to do ABS, all kinds of things. But everything can be very efficient on the chain. So that's our values for traditional finance.
All right. Yeah, we're kind of running out of time, so I'm just gonna give the panels, guys. If you have any, things that you want to add up to the panel, now is time to say. Did you fit? Would you want to say?
We have too many to say.
Yeah, I wish this panel can continue as well.
I would say this is definitely the trend, moving because money on chain plus the chain itself plus the. I would say plus the wallet. We didn't talk about wallet. Wallet is the future account. So wallet, money on chain, and the chain itself. This put together is the next generation of financial infrastructure for the future financial industry. Payment capital markets will largely rely on that. Based on this belief, that's what we build, and the marketplace is also on-chain marketplace. And a lot of assets will come in. So please stay passionate about it. And I think things will happen. I think the landscape probably will change in the next 2-3 years.
Yeah, I'm already feeling so much change myself. Like this year, I have seen ordinals, BRC20, and then meme coins and different things. Now I feel it's all about RWA suddenly, but also back up with a lot of institutional supporters as well. Very interesting. Thank you so much, guys. I'm really appreciative to have you on my panel. I wish this panel can continue. I hope you guys also learn a lot. Thank you so much, everyone.